I'm barely exaggerating when I say that the stability of the European banking and financial markets depends on these two women.
So Saving and Investment Union says there is a mismatch between the savings we have and the investment needs we have. The underlying assumption is that if we integrate more, we have a stronger development of the financial sector and thereby also stronger mobilization for these investment needs.
There's not one single measure, one single wand that will kind of magically somehow transform us to having a fantastic working European capital market that is united. For me in particular, we need to look at the demand side. How do we make sure that actually there is the ability of investors to engage in capital market, either as retail investors through their long-term financial planning or through collective investment via occupational pensions or private pension schemes. And a lot of that will depend on national measures as well, because a lot of it is linked to pension reform, to taxation, to issues such as that, which, are not managed at European level, which is why it's so important that national and European efforts are moving in step. And I think the other thing, maybe a bit closer to my heart, is clearly looking at how can we create an effective and efficient regulatory and supervisory system that actually underpins that single market, because breaking down of some of the barriers is incredibly difficult. But I think if you're not tackling some of the framework in which we are actually working, it will be very hard to make those steps.
The banking union has 3 pillars. So I spoke about supervision. The second pillar is resolution. A lot has happened. We have industry-financed funding for resolution. We have new mechanisms. So we have bail-in capital. We have an institutional framework. But there are gaps. There's actually a very concrete proposal that came from the European Commission, which is called CMDI, Crisis Management and Deposit Insurance. In a nutshell, making sure that also mid-sized institutions could fall under resolution and that sufficient funding for these resolution cases would be available. So this has been discussed intensively. It's currently in the trilogues in Brussels, and we very much hope that a solution is found which is close to the original Commission proposal, because we thought that was really workable, and it would also, as I said, would also be good for supervision and overall for the stability in the system. The third pillar of the banking union, this is European deposit insurance. I would say that 10 years after having the single supervisory mechanism, a significant reduction in risk and stable financial system, a resilient banking sector, now is the time actually to move on also with these 2 files, resolution and European deposit insurance, because we don't know what the future holds in store.
Coming to the sustainable finance agenda, I think, again, Europe was very ambitious, very fast in putting out a lot of different parts of the regulatory framework. I also have to say we did some of that not necessarily in the most logical order, because we started with some product disclosures before we had company disclosures and things like that. So I think it's absolutely right to take a step back and say, where does it make sense to readjust, to maybe take a step back to get to the right outcome?
So first of all, the simplification agenda. I think it's critical that we don't take it as a synonym for deregulation. So these are 2 separate things, and I'm sometimes a little bit concerned that these things are not clearly differentiated in the public debate, so that we may end up in a situation where the standards are weakened, and that's certainly not where we should be. So maintaining resilience, the resilience we have achieved, is really key. Now the climate agenda. I think it's critical that also the banks have the relevant information they need to manage these risks. And this is why we said, of course, also for the climate-related reporting, one can improve the system, one can make it more efficient, but one also needs to make sure that the relevant information is there, because the banks have actually invested into these risk management systems and they need this type of information from their corporate clients.